Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, this is James Thompson from the BuyBox Experts podcast. Today's episode is part of a special series of interviews that we have done to dive deeper into the recent phenomenon of private equity companies and FBA aggregators investing in private label brands that are leveraging the Amazon sales channel. As part of this series, we interview a wide range of investors, brokers, consultants, and entrepreneurs that have recently sold their private label brands. We peel back the layers on what's happening in this new investment space and look at how private label brands are finding financial success through the building and eventual sale of their online businesses. For 3 weeks, from mid-February through early March, we will release a new episode every weekday on this topic. Sit back and enjoy today's episode. Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I've co-authored a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. We also support investors with due diligence services. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focused on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase bottom line month after month. Check out disruptiveadvertising.com to learn more. Today, our guest is Alexander Avanth, co-founder and chief relations officer at Alpha Rock Capital, a digital acquisition company. Alpha Rock Capital is an acquirer of FBA, or Fulfillment by Amazon businesses, with the mission to bundle and build a new generation of digital retail conglomerates. Alexander's firm provides an easy and fast exit opportunity for Amazon sellers in the $100,000 to $1 million acquisition space. Alexander is a global entrepreneurial nomad running businesses in the Philippines, Denmark, and the US. Alexander, welcome, and thank you for joining us today on the BuyBox Experts podcast.
Thank you so much for the invitation. Excited to be here.
I want to start by asking you about these FBA private label businesses. They're a very hot commodity these days. What do you think has happened to generate this recent interest in such businesses that have been around since the start of the Amazon marketplace nearly 20 years ago?
It's a great question. And I think there's really a lot of different dimensions to it. But to put it simple, I think we have reached a point at which this Amazon marketplace has simply matured enough for these assets, these FBA assets and private labels, to be treated as almost some kind of stable, I can call it stable asset, tradable asset. And this is something that has, you can almost see it as something that has matured over the last 10, 17 years almost. We've gone from almost different generations of sellers being first, I guess you can call it generation one seller that has been a reseller of products, to someone who has established a private brand, to someone who's now doing trading off different platforms, not only on Amazon, but on Shopee, Shopify and Walmart, et cetera, et cetera. And this maturity, along with the maturity of the Amazon algorithm, weeding out some of the, I guess you can call it lesser legal sellers, black hatters,
yes,
gamified reviews, so on and so forth, has left off these FBA assets now to be running businesses that can be optimized and that can be traded as if it was a brick and mortar business.
So what do you expect will happen in the next couple of years as the number of FBA aggregators increase and you've got more competition for buying more and more of these private label sellers?
Yeah. So a number of things will happen. First of all, even though this seems to be almost like a final stage or final form for FBA businesses, I still think that we are only scratching the surface of what Amazon really is. I mean, we're seeing a steady growth of gross merchandise value. The numbers for 2020 is somewhat, I think it's around $295 billion US, and this number, yeah, it's a huge number, and this is solely provided by third-party sellers. And if you look at the US as a singular market, you know, that's just one of many. We're seeing India now grow Europe is expanding, and we have a lot of other markets out there that are slowly maturing up. So the aggregators, well, even though a lot of money has been raised in this industry, and it seems to be that the likes of Thrasher and Perch and so on and so forth are kind of these dominant players, I think what we're really going to see is the market further developing, more sellers coming to the platform, potentially more aggregators coming to the platform, and this symbiosis is going to continue for a good few years.
So you didn't grow up as a private label seller on Amazon. So I'm curious to know what drew you to the space and what kinds of issues have surprised you the most as you've learned more and more about these types of entrepreneurs?
Yeah, it's a great question, and usually I say I'm somewhat of a green Amazon seller. I mean, we're doing well today, but I actually joined Alpha Rock Capital first as an investor roughly 2 years ago. I come from the corporate space, I guess you can call it that. I used to build corporate ventures, so helping established businesses grow out into new markets. But I met my co-founders who are running Alpha Rock, and I started seeing the dynamics of these FBA assets, which, as you know as well, are quite unique. I mean, you can basically run an end-to-end business here, just leveraging the Amazon platform, and you see a steady growth with the Amazon. I guess you can call it the expansion that contributes to the assets on Amazon. So an organic growth contributed to your FBA asset comes from just Amazon doing what Amazon does, which is expanding their logistics opportunity within different markets, optimizing the delivery processes, so on and so forth. And once I started seeing this opportunity, I realized that, well, not only is it that you can operate an asset, you can actually operate multiple assets. And bundling them together, well, you start having what looks like a portfolio. And the further you can diversify this portfolio, the more you can diminish the risk. Because let's not kid ourselves, we are still in the grasp of Mr. Bezos' iron fist here. So there is a risk associated to being on Amazon, just as any other kind of business. This is not a certain business at all. It depends on how you structure yourself.
As you have met some of these private label sellers and you've gotten to know how they think about building businesses, those entrepreneurs are probably very different than the types of entrepreneurs you historically had experience with. Tell me about what you're learning about how people make businesses happen on Amazon. Yeah,
I mean, it's great meeting Amazon sellers, James. These individuals who really, they are entrepreneurs. They've built up their businesses with sweat, blood, and tears. Some of these people have devoted countless hours into getting their product from A to B, working on their reviews. I mean, to be honest, it's something that I don't think I could do. And it's quite a unique experience sitting down and talking to these sellers and learning about how, they didn't start this business to have it exited, right? But they've seen themselves grow almost to a point where they're starting asking questions on, maybe I want to do something else. The sellers that we've been dealing with are everything from a mother who is raising her 2 children to a teacher who started his business out of just a passion project and now really wants to buy a little house. And I think it sounds unreal, actually, and you have to assume that this is not just a business. This is actually something of quite how do you say? It's a passion value, right? It's something that they've nourished through a lot of years, and I think this exchange makes it a lot more humane when you start dealing about the numbers and taking care of the brand and ensuring that this brand grows, etc. That's quite a unique experience.
So let me ask you: the Amazon marketplace will likely continue to grow. Amazon will continue to tweak its policies, but the desire for better, cheaper versions of products continues to drive the Amazon marketplace. With so much manufacturing capacity available for the average individual to go off and have something built, how do you see consumers becoming entrepreneurs, becoming potential companies to acquire? How do you see that whole cycle developing over the next 5 to 10 years?
It's definitely getting more competitive. And it's becoming more difficult to launch anything in this space because of the reasons you just mentioned. I think you'll still see that there are the outliers, right? And that there are individuals who manage to focus more on quality or on price, for that matter, that pull through. But it's hard for me exactly to predict how that might turn out. With the expansion of the marketplace comes the natural influx of more consumers, more customers to buy the products. And I think depending on how we'll see that balance kind of grow, whether there'll be more sellers to a slower growing market of consumers, or whether the consumer market will expand faster. I think those dynamics are really the drivers of whether or not you will be a successful seller on Amazon, and also whether or not you'll be a successful aggregator, because you rely as an aggregator that these products can grow, what it might be, 20% annually, 40% annually. Now, and some of these forces are really dependent on how much demand there is on the platform. Amazon just launched in Sweden, and being in Denmark here, we have a bit more stricter rules into how conglomerates, I guess you can call it, the monopoly players comes in and dominates the supply chain. But it really comes down into, can Amazon grow fast enough, expanding into new markets, introducing new customer segments, and making sure that there's a demand and supply equilibrium, so both parts of this platform can grow. Because if not, then as you mentioned here, we'll have an issue on success rate of both launching products, new products, growing your current assets, et cetera, et cetera.
So let's talk about some of these companies that you're looking at today. What has to be in place for you to start to be interested in looking at a firm?
So I think if you look at the actual value of many of these assets, it comes down to your reviews. Reviews is really what constitutes a tangible value for an Amazon listing.
Okay.
And I think this comes also as an effect of how the Amazon algorithm has become better at how do you say, measuring whether or not these reviews that a certain listing have gotten are legitimate, or you have been doing the whole pay for reviews or free products for reviews.
Yep.
There's a certain steady growth rate to reviews, and the more clear these stars are on the product, the more, I guess, a stronger benchmark this product has as in terms of legitimacy. And it's obviously that was the big eureka moment for me. I had my interest in online stores, but I've always been nervous about who can pull the plug on this. What happens if one day the demand for this product decreases, and the clear trigger for this is that, well, customers read customers' reviews before buying anything, and so this becomes the holy grail for anything we acquire. The second part of it is, of course, we try to stay away from things that remain too complex in their, I guess you can call it, both from production to consumer hands. If it's a perishable good, such as any kind of supplement, anything that actually has an expiry date, that's something we're a little more careful about. We love, I guess you can call it, the more evergreen or unsexy goods, for lack of better words, right? Anything that you actually have in your house that you don't really question how it got there, but that you need, whether this be a cover for a plastic cover for your documents, whether this be a spatula for your kitchen, items that always will have a certain amount of demand, depending on, of course, if there's a big shift in the way we live our lives. But plastic is not going to go out of fashion, at least for a few more years. Yeah. So these targets are usually the ones that we enjoy the most. And then, of course, we have an opening for brands that doesn't necessarily need to be top 3 in the category. We focused a lot on the back end. We have a lot of great technical people on a team that looks into supply chain sourcing, making sure that we can work a lot with kind of the engine of the product before it gets into the consumer hands. So we like, to some extent, brands that have potential to grow maybe from a top 10 up to a top 5 placement. It really depends on what we see when we also look at the market category of these products. But yeah, we try to not look at the top ones. We know that there's plenty of people looking at those already.
Right. So let me ask you this: when we look at where these brands are coming from, there's definitely a role for brokers in terms of presenting these brands to potential investors. Do you think today there's enough firms available for aggregators to be able to wait for those firms to be made available through brokers? Or do you see other models of sourcing deals becoming more and more prevalent?
I think you need to be out there. Just as we talked about, these sellers exist in communities, first of all, as well. And I think there's a certain respect that needs to be enforced as well from these aggregators. This is not just a fire sale. We throw the money on the table and they will come. I think there's a necessity to understand that you're buying something that has a value in it that goes beyond just cash in hand. There's, you need to understand the product and the individual who's built this product. While you could actually meet in person, we tried to do what we could do to join, of course, the conferences, but also just meet individuals in person, because the face value is I think is necessary when you're taking over something that has been someone else's blood, sweat, and tears for many years. So that organic outreach, which I think many of these aggregators are doing quite well with, getting out where the sellers actually are, involving themselves in smaller communities, both in physical form, but also in online form. We have our main operations out of the Philippines, and there is a great amount of, I guess you can call it digital nomad sellers that flourish around Southeast Asia. And this was also one of the reasons that we found this to be a great place to kind of go for where they are.
So let me ask you this. You are talking to a number of firms. As you have those conversations with these prospective brands or brands that you might be interested in, what are some of the characteristics that you wish more of them would invest in before thinking about possibly selling?
Yeah. I mean, I think the reason for selling can be anything. To be honest, that's a good question, James. Let
me put the question a little bit differently. Yeah. When you may not be seeing formal prospectuses on each of these companies. As you have conversations and you say, oh, okay, that's kind of an interesting business. We can do some due diligence with just external data to learn about the business. We can ask questions. But then you realize this entrepreneur hasn't done this, this, and this. And quite frankly, the business isn't as attractive once you start to find out that they may not be running it as a real business, or they don't know how to organize different parts of the business. I'm curious about what are some of these issues that you're running into over and over where you say, gosh, that was a good business if it weren't for this, this, and this. And some of these things are fundamental to potentially being interested in buying them in the first place.
So to be honest, many of these things is actually something that we provide to the sellers who are interested in exiting. There's a number of different.
Let's talk about some of those. What are some of those characteristics?
So there's a number of different tools you can leverage that can allow to tap into the Seller Central and extract yourself a P&L. And I think we like to do a data-driven due diligence. We like to kind of get our own numbers up front first. Perhaps this is actually a good recommendation. It's necessary to understand the lifetime of this asset, right? I think many of the hardship, the failures, the success rates, everything that might have contributed to where the asset is today is something that brings value in our eyes, right? If you feel that the negotiated contract you have with your production facility in China or in India, wherever you're getting your product, is something that has strong value to it, then any of these things contributes to a great sales argument. The same thing goes with anything you might have had that has sold better seasonality-wise for your product, maybe product launches, successful experiences you've had with maybe introducing your product to different markets. We have what we call a hierarchy of optimization, or a hierarchy of operation that we kind of move into, and this is everything from inventory to sourcing to PPC to the way the listing is looking, and these are all the terms that we consider valuable when it comes to running an FBA asset. So I think much of this information is something I'd gladly provide in advance, of course, as well, but also something that basically helps a seller wanting to sell their businesses understand what are the things we're going to look at anyways, right? What are the things that we are going to be digging down into to a large extent? PPC is a great one, for example. I mean, it's difficult to run a fully optimized PPC strategy, and if that's the case, then I mean that's a great sales point as well. Just talk through what has worked, what hasn't worked. Have there been success or non-successful experiences with running advertisement on your listing? And this is potentially also something that brings value to us, or something that we can further on due diligence process.
Our firm has done due diligence for a number of investors on some of these brands. And one of the things that we see over and over is because many of these because many of these entrepreneurs are bootstrapping the business themselves, cash flow management becomes a constant problem. And they never have quite enough cash to invest in growth the way that a large investor might have, to be able to take the same business and say, we can spend an extra $100,000 on advertising over the next 6 months. Well, the past entrepreneurs simply didn't have that kind of capital to spend to build growth. How do you see the role of an investment company like yours in being able to spend more money to drive more growth? Where do you see yourself particularly excited to be able to invest in growth?
Yeah, great question. And I think there's three types of resources that we've seen in addition to capital, which is expertise and know-how, and then of course time. But capital, when it comes to actually working capital, I think is of course a great upside for us, because that's something we can inject right away. Whether this be running out of inventory at certain times. As you might know right now, Amazon is having a great fun not allowing any goods to go into their warehouses. But these are, of course, also upsides for an aggregator or a company like us, because that's an instant gain, so to say. So sometimes, the troubles that a seller might have experienced when it comes to capital isn't necessarily the same kind of trouble. It's actually a gain point for an aggregator, because this is the direct kind of benefit that can be solved with capital. So that's a great point, and definitely also one of the things. Just be honest about, if you had an extra $100,000 or $1 million, where would you have put it into in your business, for example?
So let's talk about expertise. You said you were talking about. I mean, I'm interested in understanding more about how you differentiate your firm from the many other types of investors out there looking at these brands. When you talk about in-house expertise, what are some of the capabilities that you're able to bring to bear to help some of these brands further their growth?
So we've tried to, actually we started from scratch, right? So everybody at Alpha Rock Capital has this lifelong learning, mantra embedded in our mind. So and I think it's very necessary when you deal with online assets, because when you're dealing with anything online, the half-life of knowledge is cutting almost every month almost, if you don't keep yourself updated, whether this be on how you run PPC on Amazon, whether or not there is different changes to the tariffs or the import rules from US to Amazon Canada. Europe is a completely different animal, right, with all the different VAT laws. And I think most of this was actually something we tried to map out from the very beginning, right? Treat every single one of these learning experiences as something that should be developed as our own internal course curriculum. So we could continuously update and continuously train individuals to operate these assets. Human capital plays a humongous role in how we found our competitive advantage. Not only cheaper labor rates in the Philippines, but the ability for us to quickly train and develop operators to manage these brands. And I think that has become really something that drives our growth curve, because every time we onboard a new asset, we need to have an operator ready to take over this asset. Yes. And who has the same attitude about never becoming an expert, because there's always something more to learn. And I think that continuous learning cycle is paramount for the survival of these brands. On top of this, we've of course aggregated a number of different technological solutions that helps us kind of bridge together everything from product sourcing to customer relationship management, and these are things that we are now developing our own software solution for. I think we learned very quickly that you kind of find singular solutions for many small problems on Amazon, and bridging these together as some sort of a cohesive API is something that we really saw as necessary as well. So that also came naturally as we started learning more about the sourcing aspect and the operation aspect of FBA.
How do you see your business being successful in the long run? Where, based on where you are today and where you want to be, what are some of the things that you can share with our listeners around what needs to happen in your business, what needs to happen in the industry for you to be able to continue to find long-term success?
It's well, I think we really, one of the key winning conditions of Alfrog right now is that we really enjoy what we're doing, and I think we're humble enough to understand that there is a lot of players coming into this industry, and we have so much more to learn. Currently speaking, we are also in the midst of a capital round, so we are very open-minded towards getting to the next stage of growth, really scaling up an operation to be twice or 10 times as big. Requires a completely different approach to how you operate and how you grow your business.
Yes.
I think one of the success criteria is, of course, down the line that we'll see some of the more established conglomerates moving into the sector. Now, this might be P&G, this might be Johnson & Johnson, but once the real big brick and mortar conglomerate starts smelling that, okay, this e-commerce market is something that is really attractive, who knows what's going to happen.
Yeah.
These guys are hungry for market share, and seeing how Amazon almost creates more market is a natural segue into them moving into the market. We have dreams of an IPO one day, of course. We saw Anchor being successful this year, right? And I think that's so cool, right? An Amazon private label turning into an IPO. I mean, that's amazing if you ask me. That shows a completely different value system growing from this Amazon marketplace, and I think that might also be an opportunity. I think we're careful of saying anything here about selling off or exiting. I think it's a great time to be on Amazon. It's a great time to start exploring. And even though it seems like there's been a lot of occupation of the market this year, we're talking again about a $295 billion gross merchandise market. I mean, it doesn't matter how many.
Tiny. Yes.
Yeah. So, and I think it's individuals as yourself as well who can help, take the hand of people wanting to get into this market or wanting to get out of this market that might also see benefit in just sticking with it for a few more years. We also see other platforms emerge. Etsy and Walmart has been extraordinarily successful this year. So that's obviously something we also are looking at. And then we have the whole expansion into the world and Southeast Asia and so on and so forth. So success for us, I think, for now is continuously doing what we do, but also being very open-minded that we should continue not to be the smartest person in the room. What I mean by this is to continuously reach out to both new investors and new business partners who might see things that we don't see. Because let's face it, that's the reason we kind of came to this market to begin with.
Alexander, I want to close our discussion with sort of a little bit of an unfair question for you, but there's this constant balancing act between you want to buy companies that have growth potential, but on the other hand, these brands that are looking to sell, how do they avoid leaving too much growth on the table for the investor? That is to say, how do we make sure that the brand actually is at a good place to sell versus leaving too many opportunities to sell at a too low a price so that you can turn around in the next 3 months and quickly upgrade the business? How do you think about that balancing act?
Yeah, I think this is a discussion that needs to take place before going to any kind of aggregator. If you as a seller have a business and something else has come up, this might be that you've become a father or a mother. This might be that you're getting married. This might be that there's something else of importance have occurred in your life. I think it weighs a lot more on a personal passion than whether or not there is more potential in the business. Because I'll tell you that there is more potential in the business, right? So if you're an entrepreneur on running an FBA business, more power to you. Honestly, I think this is not about having a few giants owning the entire FBA market. This is about having a healthy opportunity to exit, should you want to exit, but also about, being an entrepreneur. I think what I feel about being an entrepreneur is that this is not just something that you are and then you aren't. This is because either you like what you're doing or because you found something that is of more value to you. I think there's a lot of alternative solutions out there that we're going to see. I think there's going to come more capital availability for FBA businesses. Yes. You might be able to sell a portion of your business to a venture capitalist or an investor who's looking to get into this market. The idea of exiting 100% is just one option of many. But waiting down the line and seeing the alternative solutions, whether you just want to outsource and have someone to take care of your business, or get a loan for your business to really pump it up to the next level of operation. I think all these things are possibilities. Don't sell out if you don't want to sell out. I think that's definitely that's a personal advice. I think that's not an Alpha Rock advice, obviously, but that's something I think is quite important when you are running any kind of business. This is for you. But it could be for me, but that's really up to you.
Alexander, I want to thank you for joining us today on the Buy Box Experts podcast. For those of you interested in learning more about Alpha Rock Capital, please visit alpharockcapital.com.
Thanks for listening to the Buy Box Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.